Hey everybody, this is Jose Blasco. How are you everyone? We are live. Can I get some confirmation from you that you hear my voice and all is good? I'd like to have a quick confirmation on the chat box. That would be really, really helpful if possible. Thank you very much. I guess everything is going to be fine. But again, before we start the sessions, I always appreciate to have such confirmation. Very nice. Thank you so much. Thank you very much. I'm also doing a final adjustment here on my end on my camera so I can turn my video stream as well on, which I'm almost ready to do. So here we go. That's it. I'm ready. So that way we can be properly connected and I can show myself. You can see me, and that way the session is a bit, we are a bit closer instead of being so far away from each other. So welcome to the session, everybody. Today is July 21st, 2020. We're getting together for our short-term trading session. So we're going to be looking at futures markets. We're going to be looking at Forex currency pairs as well. We'll be looking at different opportunities with leverage assets to take advantage in an intraday basis. Today is short-term, isn't it? That's what we're going to do. And we're going to be using TradeStation. We're going to be using TradingView. For sure, I'll be planning the trades, sharing the parameters of such trades on the screen. So no matter the brokers that you guys use, you'll be able to execute such trades only if those trades obviously meet the rules that we use in the room. And if they do, we'll be delighted with them. And if they don't, we'll simply move into another market looking for quality trades instead of forcing a trade which doesn't meet the rules. We just don't do that. For the ones of you that have been trading for a while, this is common sense. But for the ones of you that are new to trading, it's imperative that you understand in early stages that being mechanical is absolutely key. And this is exactly what I'm going to do. Look at the markets. If the markets meet the rules, take the trade. If the markets don't meet the rules, change market until I find markets that meet the rules. It's that simple in the end. Okay. Let me take a look at the chat box. Good to see you, Leland. Tolly, how are you? Good to see you. It's a long time. I didn't see you around, so I'm very happy to see you. Marcus, how are you, Marcus? Miguel, good to see you as well. Wonderful, everybody. So cool. So one thing left, reading the disclaimer for you and we begin. So disclaimers, the following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through a demonstration do not indicate in any way the results you may receive on using our products. And this is the introduction, my friends. The session is now officially on. Properly introduced, and therefore we are ready to trade. Okay, so how do we trade? Let me freeze the screen so you guys get to see what I have on my screen. Basically, what I just give you here is a screenshot of the radar screen on TradeStation. You can see on the upper left futures markets, which are quite liquid, and therefore we are using 15-minute timeframes to assess what we call the climate, and we're going to do that with a tool called AutoClimate applied here on the radar screen on the top. Basically, it gives you blue and red colors. Blue means that you should be a buyer. Red means you should be a seller. And when I mean you should, I mean that you have a statistical advantage if you do so. I'll get back to this with more detail in a second. What else do we have? In the middle, we have climates, which are of 60 minutes. Why? Because those markets being liquid, they are less liquid or less volatile, and therefore we are dealing with them in a 60-minute climate instead of 15. And below, we have markets that are a bit less liquid or a bit less volatile or both. And again, we are looking at 240-minute climates for those ones. The process on how to approach the trades is always the same. First, look at the climate, and the climate basically gives you a go-ahead or a no-go, right? And that's what the climate is gonna tell you. So, for example, in this case, we have the ES, we have a golden alert near sensible long. All of these sounds very appealing and interesting, isn't it? But under climate, we have a gray box telling you the climate is not defined yet. It's not blue or red, it's gray, meaning we don't have statistical evidence enough. We don't have enough statistical evidence to assume that this climate would give us any advantage from an odds point of view. And therefore, we are simply going to pass on this trade. Okay. A few weird things are happening on the background of my camera. I'm not really sure what's happening. hopefully it's all good during the session. Anyway, so what do we have? Well, one opportunity we can start the day with, okay, it's the Russell. Okay, why? Because we do have a defined climate, it's blue color, and we have the indication, we have our alert near sensible long. So let's go ahead and open the workspace for the Russell, and let's see what the Russell has to offer to us in today's session. Okay, so let's take a look. Loading the Russell, okay, and let's begin with a 15-minute time frame, which is the time frame where we define the climate. Okay, and you can see here 15-minute time frame. You can see here we have a thick and blue dot. Thick means confirm, blue means up climate, so time to be a buyer, and because it's confirmed, it's time to trade. If it was to be thin, like the prior ones, okay, that means that the climate is not confirmed and therefore it's not time to trade. Notice how there is no clear direction. Trading is basically a waste of time. But if we do have a thick dot, it means that there is a statistical advantage by taking the trade in that particular direction. So we are now keen to continue planning the trade. And we're going to do it by looking at our potential buying price to be around 86.33. Okay, so 86.33 is going to be our reference price. It doesn't mean we're going to take the trade, but if we were to find an entry point around that price, and we do have one, we have a green UFO here at 86 something, that UFO is enveloping our reference price. So guess what? This does qualify as a valid entry for such trade. Okay, so the top here is 87 something, the bottom is 83 something. My only problem with 83 something is that it overlaps with that UFO, and therefore the bottom part should be 80 to 90, which coincides with 80 to 90. Okay, so that's going to be the trade. We're going to be planning on an entry using that UFO here. The entry is going to be 87.7. Okay, that's going to be the entry with a stop below 80 to 90. That's going to be 80 to 80. Okay, 80 to 80, that's going to be the one. So let me go ahead and bring a trading view on the screen so I can go ahead and open the order panel. Let me load RTY U2020, which is the right symbol, so I can input the parameters of the trade. We said the stop is going to be 82.80. That's going to be the stop. Okay, and we set the entry, I think we said 87.70. Yes, 87.70 is going to be the entry. Okay, so in other words, we are dealing with a trade where we have $245 of risk per contract. I'm going to execute the trade with 2 contracts, so I'm going to have double the risk, around $500 in this trade. If you want to execute the trade with less risk, you can always use the micro E-minis. Okay, so that would be the MRTY, isn't it? So you add an M in front of the symbol, and you will be executing the trade with a micro E-mini contract, which are 10 times smaller the size. If that was to be too small, you can just use more units. Okay, so time to find a target. So to find a target, I'm gonna turn on AutoUFOs in the 15-minute time frame, looking for red UFOs. Notice if I zoom out, I don't find any red UFO above price, and if I look at the monthly time frame, okay, there is certainly price action above price. So let me load data starting October. Okay, using the 15-minute time frame, I'm gonna load data starting October. That was November, October 2019. Okay. Actually, before I do that, I want to disable auto climate. And you know what? I'll disable auto UFO as well, just for this process to be a bit quicker, a bit more efficient. So I'm going to move into minute, and again, loading data from October 2019. So we have a PD pending data here on the upper left. That means that we just need to be patient for a while. Okay, while this is happening, I want to change my style as I had before to dot on close. Okay, so then we have dots. Here we go. Still pending data. So loading. We need to wait a little bit because it's quite a great amount of data. Here we go. We have it. So now I'm going to turn on auto UFOs, and I guess we're going to have red UFOs above price. Here we go. So the target for this trade is really way too far. Okay, I mean, we love it, but at the same time, realistically, 15.2610. Okay, 15.2610. Let me type it first before I forget. So 15.2610. Okay, it's a beautiful target. Okay, but basically that means that you are shooting for an 8-to-1, which certainly it's a valid way to approach it. But given the distance that we have from entry to target, that red UFO, what probably is going to happen, given the fact that we are planning on an intraday trade, what will probably happen is that this trade will reach 5 p.m. Eastern time, which is when the futures markets close, and you will not have reached that target, and therefore you will need to close this trade manually. So we're gonna set that target, because that's how we do it. By the way, price is entering our zone, so we better rush here a little bit. But let me get here. So here we go. So it's 1487. Let me do one calculation first, guys, because if I don't do it quick, we're gonna miss the trade. So 1482, and that was 1482.8. So that's 4.9 points what we're risking. So the entry was 1487.70. So that means that safety target will be 1492.6. Okay, so let's go for it. I'm just gonna place the order and then I will re-explain what I was in the middle of explaining, since I don't want to miss the trade. So again, the entry for this trade is gonna be 1487.70 with a target located at 1482.8. 1482.8. We just said our safety target is going to be 90 to 6. 1490 to 6. And the final target we said was going to be located at 152610. 152610, which is normally, in a normal case, way too far for an intraday trade. Oh, wait a minute. I'm not going to enter the trade. Why? The green UFO I had on the left is gone. So I'm not going to enter the trade since I just lost many odds in my favor, given the fact that UFO is gone. Certainly, this is unfortunate when this happens because it's we are putting time on planning the trade. Next thing you know, we cannot take it. So obviously, it's not very pleasant. But the fact that the UFO is gone, implies that odds are less, and therefore it's better not to take the trade. So I'm just gonna cancel it. Okay, I'm gonna cancel it. Oh, wait a minute. While I'm canceling it, we have another UFO that just formed here. Well, that one is just a bit too high because the bottom part is 8670, where the reference point is 4086. So now let me tell you what I think is gonna happen. Okay, and that one is also 8670. Okay, so let me tell you what I think is gonna happen. In 2 minutes time, or 1 minute and a half, we will have an update on the market on the 15-minute time frame, and because price has been moving higher, I believe 86 is going to be 86 something, maybe 87, and if that's the case, that UFO may qualify. Okay, so I want to get prepared. The top is 87.6, 87.6, 87.6. Here we go. So getting prepared here, 87.6, that would be our new entry. Just a bit lower, and the stop much better located at 86.6. Okay, so basically we are risking 1 point, which is $50 per contract. Okay, so we are risking very little money to make 1,925. Again, my opinion about the target is still the same. It's a bit too far, but that's what the market is giving me. So I'm gonna go for it, and if we do hit that target, it's gonna be the trade of the month. Which is, as I said, unlikely. Normally, you would exit the trade as you are doing some trade management techniques in the middle of the move. Okay, but let's find out if our entry is going to be valid the moment that EMA updates. If that EMA is going to be above 8670, I would love to see that EMA to be like 87 or something like that. So then we would have a valid entry into this trade. So 10 seconds to go to see the update. Come on, market. Give us an update. 5 seconds to go. Here we go. So here's the update. 86.89, 86.89. It's right in the borderline, guys. Okay, I'm not gonna take the trade. Here's why. If the EMA was a bit higher, then great. But my problem is that the EMA stands for moving. So when price comes down to this UFO, the EMA will come down, and it's already 86, 90 something. So odds are it's going to be 86. It's going to be below 86.70, which means that UFO will not be enveloping the EMA at the time of entry, and it's going to be just because of one or two ticks, really. But I would not see this trade working well. Maybe 15 minutes from now that will work well. So let's wait and see what happens to see if 15 minutes later that UFO is still there or is not. Okay. Almost. We almost got that one. We're gonna look at other trades, but let me check first Marcus' message. Jose, do we worry about the approach to the level, rival UFO in the edge time frame when they are closer than safety target? No, we don't worry at all, Marcus, because in an up climate, sell on field orders tend to be canceled. So the sell on field orders you see in a small UFO on the edge time frame, while they are there, they are not likely going to do too much. They will probably push price down just a little bit, but it's not going to be like it's going to be a major move against. Okay, at least as long as the climate doesn't change. If the climate was to change while you get entry, then for sure in a down climate, sell on field orders tend to be added. Okay, and then that would be a different story, but it's not the case right now. Okay, so hey, the Russell, I mean, if in the end, if I had been fast enough to take the trade here earlier, we would be in a beautiful trade. Unfortunately, I was typing on the other panel to make it visual for you guys, and therefore I was not able to execute the trade. But no worries, guys. If this ever happens to you, just keep it cool. Okay, don't be upset or get emotional because you miss a trade. The market will give you trades every day, so it's okay. Gold. Let's take a look at gold. You see, talking about trades, another trade ready to be examined to see if it's valid or not. Marcus, hopefully my answer, clicked with you and is clear. Okay, let's take a look at bar chart. Okay, I want to look at the right expiration date for gold. Never overconfident with expiration dates with commodities because those letters change often. Sometimes you get confused, sometimes you forgot to save translation, and then you get in trouble. So what's the greatest volume and open interest? We can see is there, which is the Q, which is what is suggested on the top. The Q is the right expiration date. And what do I have on my translation? I have the Q. Last time I used it, it was like that, and I have it. Good, perfect. So what do we have? What do we have? Well, we almost have a trade. Almost. We'll see. Why? Because we have a UFO there that ends at 39.2. Okay, and the EMA is 39.0. So it's kind of copy paste of the situation that we have with the Russell. That UFO is slightly above the EMA, but is not enveloping the EMA. Okay, so we're gonna get prepared. We're gonna get prepared just in case. Okay, so if the trade happens, we will be ready. And what I mean by that is that we need to just like we checked for where the target should be in the case of the Russell, right? And we said for the Russell, the target should be 1526.1, right? And later I'll come back and check this trade, and if it's valid, because I know that price, I'm gonna be super fast to do the trade. Well, I want to do the same thing with gold. Okay, I want to do the same thing with gold. Be prepared. So I'm gonna load AutoUFOs on gold, looking for red UFOs above price. Okay, when I move this down, nothing is red. So what is happening? Well, let's take a look at the monthly time frame. Where are we at with gold? Okay, and as you can see, for me to assess other potential UFOs on gold, I need to go back all the way to August 2012, which means that is going to be a tremendous amount of data to be downloaded and processed by the app. So here's how I'm going to do it. First of all, notice I deactivated all the apps, AutoClimate, AutoUFOs, because that's very intense, okay? And now I'm going to load the data using August 2012, okay? So actually, let me move back to minute. I want to load the 15-minute time frame using August 2012. Here we go, I have it now. So I'm just loading data now, okay? And it's gonna take a while, and then I'll come back, okay? Because it's gonna take a while. So I'll come back in just a second. Let's take a look at what's happening to the Russell. Okay, doing its thing. Now, back to our red screen. What else do we have? Well, with crude oil, let me zoom in. With crude oil, we have an opportunity near hopeful What's the problem? The problem is the word hopeful versus the word sensible. In other words, statistics suggest up climates on crude oil should last for 7 candles. This is already candle number 9. In other words, that market may be close to changing climate, changing direction. So entering now is basically being late to the party, right? And with lean hogs here in the bottom with the 4-hour time frame, okay? So while we have a near sensible, we have a gray box, which is a non-confirmed climate, and therefore statistical advantage is not there for us. So gold is the opportunity we have as of now. We just need the data to be fully downloaded. It's still downloading PD, and we'll get there in a minute. Is there anything else we could trade on the Forex side? Yes. So on the 4-hour time frame, we got the pound New Zealand dollar flashing a near sensible short. So let's go ahead, and while gold is loading, let's go ahead and take a look at the pound Kiwi. Okay, GBP NZD. Okay, we are looking at the 4-hour time frame setup. So make sure you realize that we are looking at the chart in the middle. That's the one we care about. Notice how the climate is what we expected already. I mean, we know it from the red screen, thick dot and red. It's a confirmed down climate. Confirmed down climates in the case of the pound Kiwi last 6 candles. This is candle number 1. So we are entering this trade right at the beginning of it. Okay. In this case, our reference point, okay, for this trade is 192.27. That's the EMA value. So what I'm going to do on the upper chart is to load AutoUFOs and see where my red UFOs are, because this is a trade for us to short. Therefore, we are looking for red UFOs, not the green ones. And 20 something is here, and here there is nothing. The nearest UFO is located at 84. So in this sense, that doesn't work. But I'm not done yet. Apart from looking at the 21-minute time frame, I'm going to look at the 21 range time frame. 21 range time frame is loading. We should have it here very quickly. And in this case, I have UFOs between 23, 26, okay? And I do have UFOs that start at 29. Okay, so let me move this down a little bit to understand this better. And there is an overlap here, okay? You can see there is another UFO right here. So really, my UFOs begin at 26, and my UFOs end all the way at 32. So actually, this is a valid possibility. Okay, so let me move this to paper trading so I can have the order panel work. We are planning on a short with a pound Kiwi, with our entry would be 26, and our stop would be 192.32. Okay, now this is a buy stop, so it's going to be 34. We add 2 pips because we buy from the ask, we sell to the bid, and that's a bid chart, it's Forex. And also because it's a decentralized product, we add 5 pips to give a breathing space to this trade to hopefully not to be stopped out given the decentralized nature of Forex. Okay, so that's where the stop is going to be. So basically we're risking 13 pips on this particular trade, and if we were to look for a target, the target would be located at let me see, on the 4-hour time frame, the nearest green UFO, wow, it's like 400 pips away or something like that. So 90.67, which we round up to 68, and then because it's a buy order, we add 2, so it's 70. So basically, we are risking 13 pips to make 156. That's a 12-to-1 trade. It's a bit too good to be true, and when things are too good to be true, often they are indeed too good to be true, meaning that probably you will not reach that target. It's a bit too far, and probably what will happen is that you will apply trade management techniques throughout during the life of this trade, and probably you will be out of this trade somewhere in the middle of the move, anywhere between 192 something to 190.70. Okay, so but anyway, nice to shoot for that far target if the market was just to collapse, like sometimes it happens. Okay, not always, but sometimes. So certainly you would be glad to have set that target in that particular location. So in other words, we have a trade to be executed here. I would like to write the parameters on the screen so it's a bit clearer for you guys. Let me go ahead and type it in. So from top to bottom, we're going to have a stop loss, which is located at 1.9239. We're going to have a short entry, which is going to be located at 1.9226. We're going to have a safety target located 13 pips below 1.9226, which is going to be 1.9213. And then finally, we're going to have a final target much lower below, located at 190.70. Okay, so this will be the plan for the trade. And while this is on the screen and you guys can take a screenshot or make a note, I will be looking at your following comments on the chat box. So Marcus, yes, thanks, Jose. Thank you. Marcus, I tried watching Approach, but was too busy canceling orders. Yeah, and that's one of the reasons why it's better to rely on climate. Again, because it makes your trading less tedious. Given the fact on top of that, I just commented why, it's not that necessary, okay? Very good. Denny, can I assume RBR and DVD is better than RBD and DBR? So I'm not sure what you're talking about here, Denny. I believe you are probably referring to terminology from a trading school that have nothing to do with UFOs. So I would refer to you asking that question over there, since the UFOs are more intelligent than that, because you have UFOs that are colored in pure color, and you have UFOs that are colored with the darker color, and you know that the purer the color is, the higher the probability. So you don't need to care about the shapes, you just care about the colors. Okay, so we are doing things totally differently here. We're not approaching trading from a subjective manner, doing drawing manually on the screen. We are just using and relying on technology. Okay, so here is an example of what I mentioned. So if I turn on to UFOs, notice how there is a UFO there with a light color or pure color, where other UFOs here have a darker color. Okay, just like here, pure green versus olive green, isn't it? So the purer the color, the higher the probability. And this is objective because this is identified by technology instead of the human eye, which is obviously subjective because we're human. Okay, cool. Good question, Denny, but I guess you understand my answer, isn't it? So anyway, so back to here. Let's see what we have. Gold was loading. I'm curious to see the Russell, because 2 minutes from now, we're gonna have an update on the Russell, isn't it? So the moment we have an update, we'll be able to evaluate if that UFO in the end works or it doesn't for the trade. I believe this time it will work. Okay, certainly, I'm pretty sure this time it will work. So we'll come back to the Russell as well, but I also need to go ahead and find the target on gold, which now has loaded all the data. Now, if I go ahead and turn on AutoUFOs now, it may saturate TradeStation. So I'm gonna switch to working offline, so there is no new market data coming in. So now I can activate AutoUFO, knowing that AutoUFO will be applied once instead of real time, and therefore there will be much less trouble when it comes to getting TradeStation maybe to even freeze, depending on the type of computer you have, the quantity of RAM memory, etc., etc. Okay, and you can see that even being disconnected, it's taking a while to process all the market data. Okay, so gold contract has a target that would be located at 1842.5. This would be 1842.5. This would be the location for the target. Okay, so now that I know this, I can disable AutoUFOs. I can go back to my normal quantity of candles. I can go back to having auto climate on the screen, which obviously is key. And now, and most importantly, I can go back to reconnect TradeStation to the network. Okay, so working online, which implies I need to type my password one more time. So give me 1 sec to do that. Here we go. And we are re-entering the platform here with live data and ready to plan a trade. Let's see if we have a trade on gold as well as the Russell. Okay, we just got an update. Okay, so let's see, the current value for the EMA is 39.8. 39.8, well, Perfect. It's inside that UFO for sure. So 39.9, 39.2, that's the bottom. 39.2 falls into here. Here there's no UFO. 39.2 falls into here. There is no UFO. So this is our UFO for the trade, my friends. Okay. So the entry with gold would be as follow. So let me reconnect. Let me reconnect to TradeStation in my, here we go, TradeStation in TradingView. It's a very handy order panel, isn't it? With TradingView. So GCQ 2020, that's the symbol. And I'm just gonna plan the trade there. We are going long gold using that UFO. The top part of that UFO is 1840. Okay, 1840 is the top part of the UFO. So 1840, that's the entry. Stop would be located at 1839.1, okay, which is right below 1839.2. Okay, so notice that gold trades 10 cents at a time. Okay, so 0.1, 0.2, 0.3, right? So below 0.2 is 0.1. Okay, so that's why I came up with this. Notice that this creates a risk per contract of 90. And when it comes to the target, we said 1842.5. That would be the location for the target. So in other words, we're risking 90 to make 250. That's a 2.78 to 1 trade, which is certainly valid. Okay, certainly valid. We're also risking 0.9. So our safety target would be 40.9. That would be 0.99 ticks above the entry. That would be the location for this particular target. Okay, so let me place the order and I'll go back to the Russell. So 39.9, we are buying 2 contracts. Okay, again, $90 of risk per contract. You guys pick your size, pick if you want to use real capital or paper money. All of this is, of course, your decision. I'm going to use 2 contracts. Stop, we said, was going to be 39.1 right there. 39.1. Wait a minute, I made a mistake here. The entry was 40. Here we go. So 40, 39.1, and we say safety target was going to be 40.9, and then the final target we said was going to be 42.5. Okay, so here's the trade. Okay, here's the trade. You can see how we are relying on this UFO because at 40 and 40 there is no other UFO on the edge time frames on the left. So we are relying on that UFO. Stop goes below by 1 tick. Equal distance above is our safety target. And finally, 1842.5 was found. It was a red UFO found on the 15-minute time frame, which is our common time frame. This is dot number 2 on the climate. Climates on gold to the upside could be up to 8 candles. That would not be surprising. Statistics suggest that's a normal thing. So in other words, certainly this seems like a valid trade and reachable and meets our rules and so on. Hence, I have the orders in the system. Okay, so hopefully all of this went well. I am about to switch to another market. The Russell will be the next one in line. I'll leave this in the screen for a second so you can take a screenshot. And in the meantime, check a bit more of your comments. Marcus, I'm in that, with the micro, very good. You reached T1 already. Nice one, Marcus. The one I missed, you mean the one, with the Russell 2000, got it. I could have been a bit faster, isn't it? But anyway, I'm glad that you are practicing with me and you already hit target 1. So well done, Marcus. Very nice to hear. Miguel, Jose, if the pound trade fails, do you still continue watching the climate? Yes, absolutely. This is one of the rules, isn't it, Miguel? I mean, in our let me bring it to the screen so you guys see it. One sec. Where are you? Here we go. So in our Forex course, right? So we teach you a process that we then plot in the format of a flow chart, which I'm loading on the screen, which out of a mystery is not loading easily. It's just giving me a white screen right now. I don't know why. Anyway, it will show in a minute. Okay, so I guess I'll come back in a minute to see. But basically, with that flow chart, one of your trade management rules is a change of climate. So in other words, if there is a change of climate in the middle of the trade, you are supposed to exit, because if not, you are basically hoping the climate will change, which is against what statistics suggest. Okay, you trade in the direction of the climate because the climate is not supposed to change. So if the climate was to change on you, you have to get out. It's a manual action. It's certainly wise one. Here we go, Marcus. In what edge time frame do we manage the trade usually? Minute, share, or tick? Any of the three. When a new UFO form, you would be trailing stop. Okay, there are videos on that, by the way, on the sharpening playlist. Okay, so you guys take a look at videos that talk about trade management. There is a video where we talk about trade management. It's also called the flowchart video. So this should help you as well. Okay, and it's a mystery. The flowchart I loaded didn't load. Let me try again. It's just a graphical picture. This should load very easily. I'm not sure why it's not loading. Let me see this time. Hey, look at that. It's not loading. So let me try it differently. I would really like to have this on the screen. I think it would be useful for you to see, guys. Let me see, 1 second. Here. Okay, it's not ideal, but I guess it's good enough. Okay, so this is what I was referring to. We got a climate change rule under trade management, Miguel. So if the climate changes during the life of the trade, you are supposed to act on that and get out. Okay, good, perfect. Well, not the ideal screenshot, but at least I was able to show it. So I'm happy about that. Price is coming quite fast towards the entry, so we may get filled on gold. That UFO is like this. Here we go. We just got filled. Okay, so let's see what's going to happen. Climate should kick in, the EMA should kick in, the unfilled order should kick in. This is what statistics suggest. If not, we have a stop in place. But it would be nice to see a little bit of a bounce to get to safety and then manage the trade comfortably. Okay. In the meantime, just in case this doesn't happen, using the edge time-based time frame, I'm just gonna load. I'm just gonna zoom in that one. So we just got filled on this one. Okay, and notice the candle in which we got filled is the candle that closes us at 11:38. Okay, it closes at 11:38. That is Chicago time, isn't it? Sorry, New York time, because it's the COMEX. The COMEX is in the East Coast, so it's New York time, and we're giving ourselves 3 candles for our time stop. So in other words, each of those candles is 2 minutes. The candle in which we got filled closes at 38. So 2 more candles would be 40, and the next one would be 42. In other words, we're going to be watching the clock. Okay, and if we get to 11:42 and we have not reached our safety target, so what we'll do is that we'll close the trade manually, which may be for a profit, a small one, maybe for a loss, a small one, or a bigger one. Maximum you can lose is set based on the stop, so we know that. But whatever it is, we'll just take it at 11:42 if we haven't reached our safety target. The rationale behind it, I have discussed this in prior sessions, but just in case, the rationale behind this is very simple. Why are we entering the trade? We are entering the trade because the climate was suggesting so, because there were unfilled orders, because those unfilled orders were lining up with an EMA, which may add even more unfilled orders at the same price point or around the same price point. So all of this together is giving us odds, and if all of this is true, the movement should happen. So if the movement is not happening, it may be telling you that the orders are being canceled or filled. And why would that happen? Well, if they are canceled, it's because the climate may be changing. If they are filled, it may be because a lot of contrary orders are being added. And that normally happens when the climate is about to change. So why would you stay in the trade hoping, climate, please don't change, please don't change? Just get out, take whatever it is, and replan a trade with more evidence. That's going to give you a better rate of success instead of sticking with the trade, cross your fingers, okay, and hope for the best, okay? And by the way, what I just said may be the case because our UFO is gone. So that's not a good news, okay? Even though the climate and the EMA is still in our favor, so we still have forces pushing our direction, but certainly it's looking less good compared to earlier, okay? Now, given the fact that the climate is up, we may see a green UFO form here anytime, and that would signify a new collection of orders to buy added to the market. Here we go. You see, 39.8. I'm just going to move my stop to 39.7. So I'm just reducing my risk now. right below the new UFO that formed because the prior UFO did not exist any longer. So I'm now relying on the new UFO that formed. We're 1 tick away from safety target. 2 ticks away now. Let's see if the market will give us a little bit of an extra push. If not, worst case now is to lose $60. In the meantime, I'm still looking at the watch. 1 minute 30 from now, if we don't reach that safety target and make $180, we're going to close the trade. Okay, we're going to close the trade. So 1 minute and 15 seconds now. So we are watching all of this. And of course, if another UFO was to form, we would trail stop again. Notice Marcus talking about your question about trade management. In this case, the UFO formed on the tick time frame and not just trail stop. If that UFO had formed in the time or the volume time frame, I would have trail stop too. Any of the edge time frames are the ones that we use for trailing stop purposes. Okay, so 2 ticks to go to the safety target. Come on, just a little push. That would be nice. 1 tick to go. Here we go, gold. You can do it. You can do it, gold. That would be nice. So we can stay on the trade and ride it further. If not, we'll take it. That's 2 contracts. But 180 would be the profit and loss for 180 would be the profit and loss for one. So when I close it, my real profit will be 90, half, because I close one and then I will have another contract in. Okay. So I'm 20 seconds away from closing the trade, 15 seconds away from closing the trade. So it's 50-50 now. Are we going to reach the target? Yes or no? I'm not sure. Okay, so just waiting there. 5 seconds away from reaching the trade. Yeah, so it seems that we're not going to reach the target. So I'm just going to close it manually. 1, 2, 3, close. That's it. I made $140 in this trade. It's not amazing. It's not amazing. And when I have an update on the climate on the 15-minute time frame, I can come back and replan the trade based on my new value for the EMA. May line up on this UFO, replan the trade, re-enter. In the meantime, I collected. Funnily enough, now we would have reached the safety target. This is Murphy's Law. But anyway, we just apply the rules. That's what matters the most. Okay, and we are out. We collected a profit. And now ready to take another trade, right? And now the beauty is that the profit you collected, even though it was limited, it was not a great profit. Well, it still helps in the sense that now if you take a loss, so the loss you're going to take, hurts less because you took a small profit first, right? So it's, again, it's all about the rules and being emotionless with your action, okay? I never want to see what's happening to the Russell. So the EMA is now pointing at 88. Okay, 88 is here. Yeah, so 88 is here. That UFO is too low now. Okay, earlier the UFO was too high. Now the UFO is too low. So no trade on the Russell. So let me close it. So no need to look at it. Let's see what else is available. The Russell is flashing, but we said not to use it. So I'll take a look at the Dow Jones, and I guess that will conclude the day by looking at the Dow. Okay, so we did a trade with the gold, we did a trade with the pound kiwi, right? Now we are looking at the Dow. That's a funny one. I got my chart totally distorted here. Here we go. I guess I saved it in the wrong position. Anyway, so what do we have? We have a climate, 3 dots. It's confirmed that all is good. My reference price is 26,851. So 851 is around here. No UFO. 851 is around here. No UFO. 851 may be lining up with this one. Let's see what's the top. The top is 49. The top is 49. The current price is 88.9. You know what? I think it's valid. If price was to come down, probably the EMA, which is currently 53, would drop down to 49. This is to be watched, but I would say probably works. Now, my concern, okay, and basically my concern is going to invalidate the trade. So we are not going to take the trade. Let me tell you. Okay, but let me tell you why. So the reason why we're not going to take the trade is that while this UFO may be valid to enter, okay, and we have the climate and we have the EMA, and I mean, we just saw it working on gold. So, again, the rules are there for a reason, isn't it? But we got a problem with convenience, okay? And convenience, what I mean by that is risk management convenience. Probabilities are there. Actually, probabilities are many because you got many UFOs there. So, one of those UFOs is likely going to turn the price up. But from a convenience point of view, when it comes to risk management, we got a big problem, which is 31 is the bottom part of this UFO, which coincides with this. The top one here is 29. Okay, the top one here is 30, is 29. Wait a minute. Yes, wait a minute. We can do it. Yes, we can do it. I thought the top would be 30. It's actually 29. So if I place my stop below 31, it's going to be 30. And 30 happens to be right in between the UFOs. So then it's valid. My concern was that the stop was going to be touching that UFO, and then I would need to move my stop below that one. And then it creates a very long vertical distance from the bottom to the top, and that would be problematic. Okay, so, but it's good, it's valid. I'm not sure how I looked at this, but it is indeed valid now that I look at it more precisely. So let's take a look at the target. See if the target is in a valid location for us to take the trade. So when looking at the Dow, you probably know this, but there's not much above, right? Why is that? Well, take a look at the monthly time frame. So when looking at the monthly time frame, we have data above, but we need to go back all the way to November 19. So let's take a look at data from November 19. So first date, November 19. Let's wait for the pending data to load. Let me see more questions. Marcos, don't we trail only after having reached T1? Yes and no. In this case, we don't. Why? Because the UFO you had for entry was gone. So, in other words, you were relying on the climate and the EMA, but you were not relying on UFOs because it was gone. Since a new UFO form, then you trail. Okay? Even though we didn't reach target 1 yet. Good point. Do we already get out when climate changes from strong to weak, or does it have to change color? We have a recording, Marcus, on the sharpening playlist that talks about setting targets. And I talk about a dynamic type of target when climate hasn't changed yet and is about to change. That will be a long conversation. I would like to ask you to go watch that video if you don't mind, so you have a proper response, okay? Because right now I will not have time to give you a proper response. That was 2 contracts, Miguel. I think I responded that. Leland, you make 160. Nice. Miguel, sorry again for the pound trade. If it is not filled and climate changes, do you cancel the order? Oh, got it. I got you backwards. Yes, if the climate changes and you don't get filled, then you cancel the trade because the trade doesn't meet the rules for entry any longer. Actually, you are supposed to. Yeah, I'm reading you now, Miguel. I understand. So you are supposed to reassess your trades every time you have a new candle on the common time frame. In this case, 15 minutes, or in the case of the Forex pair, was every 4 hours. So anyway, here's your target for the Dow futures. Very far away, too far away for a trade to be intraday. Could you get there? Of course. Is it likely? No, it's too far. Okay. Normally, in a 1-day move, you will not get there. Could it happen? Yes, it could. Okay, so expose yourself to it, but know that probably you will end up exiting this trade, somewhere in the middle of the move between the entry and your target, located at 27,219, which again, it's very far away. Okay. Now let's plan the trade here. Okay, so the top is going to be 26,849. So let's move to the YMU20. Okay, so we're going long. 26,849 is the entry. The price 26,830 is the stop. We're risking $95 per contract. Final target located at 27,219. So that's a 20-to-1 trade. Again, could it happen? Yes. Is it likely? No. Right? We have to be realistic with our expectations, even though it's a nice one when the target is very far, because sometimes, rarely, but sometimes you'll get there. And then when you get there, it really helps your accounts. Okay, so we set entry 26,849. So 26,849 for the trade. Stop 26,830, 26,830. Okay, we have final target 27,219. Here we go. And now the only thing I have left to do, which I haven't calculated yet, is the safety target, which is going to be the difference between 26,849, 26,849 minus 26,830, which is my stop, correct? Let me confirm. Don't want to be overconfident. 830, here we go. So that's 19 points, or 19 ticks in this case. So that above the entry, which is 849, that would bring me up to 868. 868, okay? So I'm just gonna place the order. Wait a minute, I cannot place the order. The UFO I had is gone. So I have the same situation I had before with the Russell, with Marcus. You made some money with it, but in my case, I need to be mechanical, guys. If this happens to you, the UFO is gone and you take the trade, really you are relying on something that is not reasonable any longer. If you entered earlier, remember your time stop already started counting. So while odds are less, at least you got more protection because your time stop started counting. Okay, but in my case, the UFO is gone. So obviously I'm not gonna enter this trade now. So I'm gonna click no. Okay, and I guess this is how we will conclude the session today. I would have preferred to enter, but in the end, I didn't have the opportunity. These things will happen to you when you trade, okay? Beautiful trade, with gold, with a continuation of the move. You will be trailing stop using that UFO now if we had reached target, safety target just a bit sooner. Look at that, a new UFO just formed on a 2-minute time frame. So Marcos, you will just be trailing from below 39.8 to below 42 to below 41.3 and keep following price until reaching 42.5, which, guess what, I think it's 42.5. Well, actually we went 2 ticks. We went 42.3. Okay, 42.3. So just a little extra push and that final target would be hit on gold. I'm not in it, but nice to see, isn't it? Probably from an educational or demonstration point of view, it helps you to understand the method and build a little bit of confidence as well on your trading methods and your trading techniques. Okay, good, everybody. So how's it going so far? How was the session? Any final question for me? Is everybody okay? Miguel, was my answer, my second answer, was it actually my third answer? Was it clarifying enough to you? How is it? Again, I'm about to say bye, but if there is any final thought, final question, I just want to make sure I get that answered before I say bye. You guys tell me. There's always a little bit of delay when we do the sessions on YouTube, depending on each of us are in the world and how many nodes we got in between. Okay. Thank you, Jose. Thank you, Lilan. Did you get my email, by the way, Lilan? I responded to you. If you haven't checked, check your email, okay? Awesome, Jose. Gracias. Sí, love it. Very good. So everybody, you guys take care. I will see you next time. Trade safe out there. Follow the plan. See you soon. Bye-bye, everyone.